Hey guys, Mike here. So in today's video, I want to talk about, this trend you're starting to see come around once again in certain types of stocks. And a lot of this you're starting to see in SPAC stocks, right? All of a sudden they're closing their merger or even not even done with the merger yet. And they'll go on this run up for 2 weeks. And, the question is like, are these breakouts happening? Not breakouts? And so I'm going to show you some charts here on the stocks now that are just on fire if you're unaware of it. And then just kind of show you a trend that's happening. You'll see it in the charts when I show you that obviously, I don't know who is doing this, whether it's the institutions, whether it's Wall Street Bets, whether it's Reddit, whoever. But obviously, groups of investors are pushing these particular types of stocks up. And so, when will that end? Who knows? And how far up will they run? Don't know that either. But you can kind of see the ending here, as I'll show you in some of the charts. And so we're going to get into that today. And, the one thing I will say is I do think, SPACs are starting to come back alive again. Like you even have like mainstream channels starting to come back around and cover like some channels that never have talked about SPACs before, even starting to say, hey, like value investors are even starting to say, wow, these are really undervalued. These might be a good time to get in. And so that's one thing you're starting to see. And I think I talked about that a couple months ago where they're so beat down at this point in time. It's like, wow. And these are growth stocks. That's what they are. And they're in the toilet. And some of them are, $7, $8, $9. And so it's good to see value investors starting to come in. So it could be something you're seeing, but it's not the value investors that are pushing these things going up 50, 60, 70% within a matter of a couple of weeks. I don't think that's happening at all. So, the first thing before we get, I wanted to talk about, or not even talk about, I wanted to show you this interview that talks about growth versus value, and it's from somebody I've seen many times, but I never would have thought they were going to take this approach to it and land on this side of it. And so it just makes sense. You got to see it to believe it. And I want to get your opinion in the comments once you listen to it, because I just agree with him 100%, and he put it very well.
Hey, look, I've only got two charts. Let's look at them and then double back and talk about the words value, growth. So the first chart is a two-panel, and really what it is it's the Russell 1000 Pure Value Index on top, making new highs. But look at its relative performance, the Russell 1000 Pure Growth Index. And this is the problem, right? Even as you're making new highs, there's no alpha. There's no alpha in value as it relates to the other choice, meaning growth. Now, the only period here in the history of this index, going back to the mid-1990s, where there was some outperformance, you could see it there on the bottom panel, was in 2000 to 2002. But look on the top panel. Actually, value was just dead flat. So the outperformance is simply a function of the denominator, meaning Cisco losing 90% of its value and Amazon losing 90% of its value and Intel 70. That's not going to happen again. So that if the value's only moment to shine was when the other trade growth collapsed, we're not in a circumstance like that. Second chart, and then let's talk a little more. Healthcare. This is my favorite sector in terms of maybe looking at, quote, value or something that's underappreciated. Here, too, a two-panel chart. The top is healthcare since GICS data begins in 1989. And the bottom panel is relative performance of the S&P. And every single time that the relative performance has dipped down to that trend line, it has bounced to the penny. And guess what happened 4 months ago? It bounced to the penny. We like healthcare here versus the market. But back to the words. I think the problem with value investing is it's the ever-changing definition, right? The original approach was you buy business assets below their replacement value, and then you sit around and you wait and hope for mean reversion. And then they abandoned price to book. They went on to other measures like PEs. And yet, at the end of the day, who's to say that the so-called cigar butt investing, it's finding things that are undervalued, is doable, whereas just sticking with long-term sort of interrupters, growth names, if you will, is the better approach. And I think that's really true. Think about this. Since the '09 low, only two sectors have outperformed the market. And they are, of course, tech and consumer discretion, largely driven by things like Amazon.
He's then asked, well, what about the yields? If obviously yields go up, that's going to hurt growth stocks, all that fun stuff. So here's a fantastic answer. I've not heard this yet, but it makes total sense.
So before the pandemic hit, 10-year yields were at 2%. And pandemic hits, we dropped down to 40, 50 basis points. And then when we got back to 177, there was this great panic. I got to dump my growth assets. Now, before the pandemic, the job at 2% yields before the pandemic is to sit there and do your 3 to 5 year DCF work and assign a multiple to your growth stocks. And people had no problems assigning a dreamy multiple to Amazon and Microsoft and Google and Facebook at 2%. 10 years at 177, we've got to dump our growth assets because why? Over long periods of time, the definition of investing is holding something that is a disruptor. It really is, let me just say it simply, it's the car versus the horse. It's the light bulb versus the candle. It's not speculating that I can catch a quick trade in a cyclical name and then I can dump it and then I can try it again. Why not just find something that's really working and stick with it?
And so definitely let me know in the comments what you think about that. I think he makes a whole lot of sense. And, look, whether you're a value investor, growth investor, dividend investor, whatever you are, stick to, whatever you believe in, but also stick to what works. And I think he makes total sense on what he's saying. And there's actually, value investing channels on YouTube, just like there are growth channels and dividends and options trading channels, but right now it's tough to find good value, something that's really undervalued right now, and unless you're looking at some of these stocks right here, which is why I said at the beginning, even people I've never heard talk about SPAC stocks at all, whether they be pre-merger, post-merger, all of a sudden some value investors are talking about these now and saying, hey, these might be time to go into these, okay? And so that's something to keep an eye on. And so, if you look at these stocks I'm talking about and understand these first stocks I'm talking about aren't the ones I'm saying go run out and invest in. These are the ones that have ran up. This is Redwire, and they've all started moving up pretty much on the 3rd of September. And if you're not familiar with Redwire by any chance, when it does finally come back to earth, if it does, this is the one I did a few months ago saying, it was the most impressive SPAC merger I'd seen because it's already profitable because they acquire so many different companies. They're already making money. And then by 2025, expects to grow the revenues to $1.4 billion with an adjusted EBITDA of $250 million. So just FYI on that one's a side note. I want to check that one out if you hadn't. And the next one's Rocket Lab. We know this one's just taken off 90% in the last, 5 days, I think it is. And so that one's on fire. And the next one you're going to see is Lucid Group, obviously took a dump and then boom, up 23% in just a matter of days here. Then you got Osprey Technologies. This is another space SPAC, up 18%, just a matter of a couple of days here. And then you got Hims and Hers, and this is basically in the healthcare sector, but this is up 32%. This is actually a nice little move up on this trend line right here. It is starting to hit resistance right there at $9. Let's see if it can break through that. But that is a nice healthy move. That isn't one of these ones just been ran up like crazy. And so as you can see by those charts before the Hims and Hers stock, they've just been running up like mad, especially Rocket Labs right now. But then if you look at the ones before this that were taken off prior to these taking off, the SPAC mergers, you can see a trend right here. And as you can see here, Sofi, it runs up on the trend line, breaks the trend line. Make sure you look at this candlestick pattern right here because it'll look very familiar here over the next couple. Opendoor, same way. It ran up at the same exact time. See that right there? The exact same pattern, breaks the trend line. And then last, you can see right here another popular one's Tattoo Chef, right? It ran up like a madman. And then, of course, what happens? You see the pattern right there? Breaks the trend line, comes down. And I don't know about you, but I actually am having deja vu of many months ago when the SPACs had these certain patterns they were in, like every one of them would run the same pattern. And I'm starting to see this where they're coming in waves now. They're running up on, or at least these were on a trend line, thank God. And then they broke the trend line. Now you got this other group. They're just running up like mad. They're not even following a trend line. They're just going up like crazy right now. And people are piling into them. And a lot of those names are on Wall Street Bets and Reddit and that kind of stuff. And we all know those. Like, somebody was talking to somebody in the membership today. He sold at 17 on Rocket Labs. I sold at 19. And, because it's just not these aren't fundamental moves or anything. There's nothing, great about these companies all of a sudden just happen. It's just these massive explosions. And, they will come down like all of them do eventually. But the question is there going to be another wave? It's just going to be wave after wave. Is this the pattern that we've started now? Or it's going to be wave after wave? On these SPAC mergers, and some of them, it's like right when they complete their SPAC merger, they're starting to run up, and that would happen before. Remember, they complete SPAC merger, they run up and then just dump, right? And so that's the thing we got to start looking out for. And again, I mean, obviously it can be an investment opportunity for you if you can spot it early enough, but just be very careful if you're deciding to get in way up on these things. You know, good luck to you. I wish you the best. And of course, the options on these things, my God, the implied volatility is through the roof on all those stocks. So that's kind of useless to even try to get into that on them. But you know, just be careful. But look for this pattern. And if you can spot it quickly enough, you can get in and ride it up, of course. And there's other things you can do, but this is something I'm going to keep an eye on. If it continues to happen, then we know. I think if we get a third wave of this happening and these drop and another third wave of SPAC merger starts to go up, you know, 3 makes a pattern. And so we'll see if that's going to be the new one, and then how long would that go on for? Because remember, what that does is it takes volume out of other stocks, right? And you saw that with Opendoor and Sofi. They all started going. They started going up at the same time, going down at the same time. And so, you know, this is something to keep in mind, especially if you're a high growth investor or you're invested in SPACs as well. So anyway, hope you got something out of this. Hit the like, subscribe button if you did. Share the video. I really appreciate it. And I'll see you guys later. And of course, don't forget to hit that link down the bottom and open you up a BlockFi account where you can buy your Bitcoin and Ethereum, as well as earn interest up to 4.5% on your cryptocurrencies, 7.5% on your stable coins, and open up that cool new Bitcoin credit card they have there where you can earn Bitcoin on every purchase, as well as take out loans on your current cryptocurrencies that you own with BlockFi.